Hello and welcome back to Dukascopy TV. With over 20 years professional experience advising some of the world's largest ultra-high net worth individuals, I'm joined by Sergio Rivera in the studio now to discuss the state of the world economy. Sergio, thank you very much for coming in today. I know that you are a man of many opinions, so share with us now your standpoint on the state of the global economy at present.
Well, unquestionably the world is slowing down. We live in an increasingly synchronized world. So whereas before you could have the emerging countries growing at a certain rate, the developed world growing at a different one, or you could make the divide east to west. Now, unfortunately, in some respects, everything that happens in one part of the world has repercussions, immediate repercussions, in another one. What had always been a locomotive for growth in the world, the U.S. consumer, who makes up about 70% of U.S. GDP, has had to deleverage and reduce consumption. So the U.S. as a whole has seen mediocre growth. Most analysts expect the US to keep growing between 1.5% and 2%, if nothing bad really happens at this point, if the fiscal cliff doesn't come to happen at the end of the year. Europe, again, in a situation of recession, depending on how you measure it, or just dipping its feet into a new recession. And the emerging world also slowing down. Most of the growth in the emerging markets has been based on export-led activities, and we see what is happening to China, to India, to the exporting countries in Latin America and Asia. Everybody's feeling the impact of the final consumers in Western Europe and the US slowing down as well.
With all of that in mind, what to your mind at present poses the greatest danger? Is it the European debt crisis? Is it the slowdown in the US, or even the Asian markets? Where is the biggest danger at the moment?
I believe that the biggest danger is that we keep pushing problems out. That, as the phrase everybody has used continues to be, that we keep kicking the can down the road. So you can look at the US as a prime example of this. The US is in a situation of facing a huge fiscal deficit. About a year ago, legislation enacted something called the Budget Control Act, and it basically dictated that the US had to allow taxes to go back up, so eliminate some of the tax breaks that were approved since the Bush era and continued via a series of provisional measures, and at the same time had to cut spending by a certain amount if no congressional agreement was reached by last November. No agreement was reached by the so-called Super Committee. And as a result of that, if nothing happens now, at the end of the year, the US will have this double whammy of seeing taxes go up and spending go down. Now, most economists agree now that this would produce by itself a recession in the US and a rise in the unemployment rate back to 9% or so. Now, So you have a measure that was agreed and approved by the US Congress, and now everybody's afraid of it. Bernanke coined it the fiscal cliff, and now everybody's saying we have to avoid the fiscal cliff at any cost. And of course, in the short term, this is a good thing because nobody wants to see unemployment go back or go up to 9%. Nobody wants to see the US fall back into recession, but at the same time, postponing or avoiding the fiscal cliff by granting some sort of extension to the tax breaks, by continuing spending, approving some extraordinary spending measures.
It creates a long-term problem, surely.
Yes, but by pushing things out into the future, it will just make matters worse.
Well, if we look therefore at the long-term future, what's next? What will work now?
Bonds, fixed income is an area of high risk, I would say, and very limited reward. Then you have equity markets, which are, I think, fairly priced. And the currency markets and other alternative assets, which I will be happy to discuss. But that leaves the investor, particularly those with long-term horizons and the need for absolute positive returns, with few interesting but few choices. My firm has been focusing on three actually, of these interesting alternative investments. One of them being technology, the second one being microfinance, and the third one, and this is the most recent addition to our portfolio of ideas, water. We feel that for different reasons, these three sectors, emerging technology, on the second hand, microfinance, whatever the big banks are not able to touch or develop in emerging economies, and water, we feel that these three investment themes will offer very interesting returns over the next 3, 5, 10, and even 20 years. And there are clients who have that long investment horizon. All of us, actually. You, Natalie, for instance, being a young professional, you should be able to save for the long term, and you should be able to live with the volatility or the lack of liquidity that some of these investments would make. If you were asking me, what can I invest in that will for sure bring me absolute positive returns for the next 6 months or a year, it would be a question impossible to answer. We would be taking a huge risk. For the longer term, yes, there are ideas as the ones I've listed that would give you interesting investment possibilities.
Well, Sergio, that definitely gives us plenty to talk about in the future. Thank you very much for coming in.
Thank you, Natalie, for having me here.
We'll be back shortly with more exclusive interviews. For now, though, goodbye.